Hello and welcome to KYC. I am Sharad Dubey and today the company in focus would be Bondada Engineering. This was an SME company, EPC space, but then it migrated and it's having a significant market share also if we compare it to an SME company to start with. But the question remains is why have we got this company in our KYC segment? A lot of questions for this as company is that going into new sectors as well. The first question is, of course, coming in from the recent forays, what will be the capex numbers? What's the growth potential for two new sectors, data center and even battery energy storage systems? That's the first question coming in. Second question is, now the company turns from asset light to heavy because of foraying into defense sector. That's the question we'll ask the management. And also a very large order win in Andhra Pradesh. What are the key timelines coming in? And that will be a significant bump up to the overall order book. Also, any value unlocking from its group companies, a lot of news flows coming in. That also is something we'll be asking the management. And in the recent con call, they said margins will improve by 100 basis points. So what will be the growth levers for this? That's something which we'll be watching out for. And also a very strong improvement in the working capital in H1 numbers. Will that aid financials going ahead? What will the execution be? All these questions will be answered in our KYC segment. But to start with, what the company is all about, that's a very important data to look at. And of course, the company, if you look at it, is dealing with the EPC segment. Operations, maintenance, most of these things are actually coming in. But which are the sectors which the company is actually involved in? This includes renewable energy, telecom, railways, and the new forays which I had discussed. These include data center and defense as well. We can show the overall breakup in the sectors where the company is actually functioning into. The manufacturing facilities, all of them are located in Andhra Pradesh and Telangana. And the total order book is an impressive 5,989 crore rupees. Tender submission, that is 7,531 odd crore rupees. That means the revenue visibility is strong going ahead as well. But let's see the order book breakup, how it stands. And renewable segment as the major chunk, almost 4,600 odd crore rupees. But telecom, Indian Railways, especially the coverage angle, is also covered in here, and a small portion coming from the product segment. Also, the key clients is very much important. This includes a very larger marquee players, Reliance Jio, Bharti Airtel, Adani Group, Indus Towers, and even BSNL making it to the list. Largely, of course, it is there in the telecom segment, which we would be focusing on. EPC services, telecom tower EPC, telecom OFC EPC, and solar EPC is something which the company would be focusing on. And O&M means operation and maintenance service, and these are the services which you give apart from the infra services, and these are high margin products. So that is also something, a key trigger for the company going ahead. Also, the IPP services, this includes solar IPP and BSS. It's a new segment which the company is foraying into, and we will be having a lot of questions on that in the manufacturing segment. These are the important key categories where the focus is there. Apart from the manufacturing also, we look at the solar and the crash barrier system. These are the products which we would be focusing on. Net, this is the total situation and the order book situation of the company going ahead. But let's move on to overall the book-to-bill ratio. That's 3.8 times its FY25 revenue, and this is an important you could say the numbers coming in. L1 order is 2,628 crore rupees. And also looking at the overall numbers, the working capital cycle, that's what I have been stating to you. These all are on the lower side. Look at this H1 number. So this will aid the financials going ahead. But what's the entire structure of our KYC show? What are the parameters we judge a company? So there are 8 important parameters we will look into in our KYC show. The first one is, of course, the income statement, balance sheet, cash flow, and the return ratio. These are largely financials where we'll be judging the company and giving the ratings. Apart from that, shareholding is there, street cred. Of course, how the stock journey has been, was it been rewarding to the shareholders, long-term, short-term, both views we will take. Valuations, what does it stand from its peak levels, and overall outlook, especially when regarding the recent forays, the street really wants to know now the future related sectors, how does the company actually pan out. So the first and foremost is the income statement, which you'll be looking at. Net, you look at it, the revenue has jumped up almost 68% on a 3-year CAGR basis. EBITDA also significant uptick coming in. Net profit 126 odd %, and look at the margin numbers, it's going up almost double digit. And for an EPC player, even if they're going to a new segment, that is still showing strength. And of course, apart from income statement, the Q2 numbers are also out. That's something which I would like to share. And overall, we see the numbers are on the stronger side. The H1 numbers, mind you, the net profit, revenue, all of them seeing 100% plus jumps coming in. Margins also 121 basis points on a year-on-year. Of course, company is an SME company, so they generally report the numbers in the 6-month basis. So net, they have passed with flying colors when it comes to the income statement. So I will be giving a +1 or a thumbs up coming in for Bondada Engineering. Up next is balance sheet after income statement. Net, largely I see the debt equity ratios, even for an asset heavy company, which company wants to go into, that itself is at a favorable levels. Borrowings not so much increased, 234 odd crore rupees. There was fundraisers also, and that's why your major ratios in the balance sheet are healthy. Cash bank balance also significant up move coming in, almost doubling from 41 crore to 92 crore rupees in the H1 numbers. So net, even the income statement and the balance sheet, both of them are doing well. So I have given a +1 rating for this balance sheet as well. Also, let's look at the third criteria, that's the cash flow criteria. And one thing I'll share it with the audience is, when you are dealing with a asset heavy business, the cash flows can be lumpy, and over a long period of time is something where you should judge a company. So overall, we are seeing there is volatility coming in. So net, current levels, if you look at it, the operating cash flows on the negative side for H1 numbers. So I have given a thumbs down. That means a 0 ratings coming in. Also, the fourth one is the return ratios. That's also pretty much interesting. That's FY25, the return ratio stood at roughly 23 odd %, but a significant uptick coming in FY26, that's 30 odd %. And ROC, a healthy one, that also generally it's around 15 to 20% for the industry. That means this augurs well for the shareholders as well. So it's a thumbs up coming up from my side when it comes to the return ratios. Also, apart from the return ratios, let's look at one of the most important criteria, that's the shareholding pattern. You must be wondering why the DIs is 0%. There wasn't much participation, and the company's listing was of course there around 2 years odd ago, and DIs have not participated, and that's a key concern for me. When I was looking at, if there is a lack of institutional participation, then only promoter float and the retail float is. The retail float is almost, you could say, the 100 minus 63, 64 odd %. That's around 35 to 36%. Promoters not selling any stake. FIs, no major increase happening, just a very minor exposure. So because of lack of institutional exposure in the company for Bondada Engineering, I will be giving a thumbs down rating for this. Street cred, that's very much important, and the company has been a multi-bagger for long-term investors, but for short-term investors, 1 month return is down 19%, 6 month, nothing much happening in the stock, it's down 11%, year to date and 1 year stock, largely the numbers are same because we are about to end the year. Both of them are down 37 to 38 odd %, but company has been a multi-bagger. So if we can show that number, since September 23, the stock has given massive returns, 1,070%. So if you are a very long-term shareholder across cycles, the company has rewarded you. But if there is a recent entry or a positional entry, then the story is different. And because of the story being different when it comes to the share returns, I will be giving a neutral rating for the street cred. Also, the seventh and one of the most important functions is the P ratio, the valuations which we have taken. There was the euphoria in the stock, also in the sector industry and in the SME space way back in 2024 highs. That peak level was 160 times when you look at the forward 12-month price to earnings ratio. But now there has been a significant correction, and if you put it in numbers, that's around 75% downtick coming in terms of valuations. Now the current numbers are just 39 times its 12-month forward P ratio. That means it is significantly trading at a discount. Earnings growth has also been there, and this actually makes it very attractive. And because of this, I will be giving a kind of a neutral rating coming ahead, because the earnings is still going to be lumpy because of the nature of the industry and the new businesses which the company is entering. You must be wondering that 7 important ratings are done. The most important one rating is the outlook rating, what lies ahead, because the company is focusing on future ready sectors as well. Recent order wins were also there. When you look at the outlook, Adani Group and ICAT certifications also coming in. There's a major announcement post the earnings season. So these are the two important takeaways coming in, where we will ask the management what kind of revenue potential or incremental gains can come in the financials. But apart from that, they have released a Vision 2030 as well. They expect to achieve 25 gigawatt renewable energy capacity, and also they want to scale up the data center and the BSS segment as well. Looking at the telecom leadership, which they have already been there, this is their old business. They are looking at two major levers of growth. One is Digital Bharat, second is the 5G expansion. But the last is also very much important. They're focusing on defense and railways. Company is also a proxy play for the Kavach orders as well. But remember, when there is a lot of B2G concentration of orders, there are execution and cash flow issues as well. And that's why at times the valuations hurt and stocks go into correction. So that's why the outlook overall for Bondada Engineering, I would be giving a kind of a neutral rating. But let's just revise the ratings overall, what actually it means for Bondada Engineering in our KYC segment, which we have taken in. The numbers, income statement, balance sheet, all of them showing good strength. So there's a thumbs up given to it. Operating cash flow, because of the nature of the business, has got a thumbs down. But the return ratios for the investors, that has shown a good strength. So a plus coming in. Shareholding, lack of institutional participation is something which we made us give a thumbs down to it. Street cred and valuation and outlook, all three of them, if you look at it, they are neutral kind of a thing set up. But net, we are giving them 4.5 out of 8 in our KYC rating, and that's largely the mean rating which we give in our KYC shows. Also, but let's get to the management to understand the entire setup of the company and where the outlook stands going ahead. Joining us is Bondada Raghavendra Rao. He's a chairman and managing director at Bondada Engineering. A very, very good afternoon to you, Mr. Rao. First question, of course, would be is your recent order wins have been coming in from Adani Group, ICAT certifications, and these announcements are coming first time post the Q2 numbers. So what is the incremental benefit you can expect about it, and if you would give more flavor to this?
Yeah, good afternoon, Mr. Sharad Dubey. Recently, we have signed one frame agreement with Adani for next 5 years. That is 5 gigawatt, almost kind of 5 gigawatt. But part of this actually, we got around 1,050 crores order, 650 megawatt, which needs to be installed in next 10 to 12 months in Khavda project. And we also got we also got one more order. This is Mahajanko, is around 450 megawatt. 450 crore and 100 megawatt. 100 megawatt needs to be installed at Mahajanko. These two are the new orders which we have declared in the Bombay Stock Exchange. This ICAT certification is for our BLDC motors. These BLDC motors are used for our two-wheeler, three-wheeler EV vehicles. We also got that there's a prestigious certification for our product and as well as the factory. These two, these two are the recent ones, and pretty much very good that future outlook for this company, because we are already L1 on almost around 2,200 crores orders from all the public sector companies, which will be declaring very soon. Maybe in the month of December, we are going to declare these orders. We are already L1 in the solar EPC side.
Mr. Rao, let's speak about your recent forays coming in the data center and the BSS segment. Of course, some concerns are there, but these are the new industries. It's not tried and tested method, which the traditional EPC company would do. But this is the new segment, data center and BSS. Give me the status update on it, and any kind of capex plans are there which are earmarked separately for them?
Yeah, both in data centers and as well as the BESS. Not only just capex model, we are also eyeing for even EPC models also, because actually this huge amount of foreign investments are coming in these two segments. So there's a lot of players are required even EPC segment also. Of course, actually we have started this best with our capex model, that is almost around 850 crores order which we got from Tamil Nadu Renewable Energy Corporation, that needs to be deployed in next 15 months time. That is around 200 megawatt by 400 megawatt hour, and the tendering process is going on further orders. Not only limiting to this capex model in the BESS, actually, we are also eyeing for the EPC model for even data centers. Sorry, even BESS. Coming back to the data centers, we already entered into managing of data centers for Microsoft, and even huge bus is there in the data centers. We are looking for ecosystem of data centers where we can where we can build a block and then give it to the data centers investors, and operational maintenance of this data center, and green power supply and cooling solutions for these data centers. These three are the major investments which are going to happen. When you say, if you see the numbers, actually, just in BESS, it's just only the less than 1 gigawatt is installed. But whereas by 2032, we have the requirement of almost around 250 to 260 gigawatt of BESS requirement is there. Coming back to the data center, huge amount of data centers requirement is there in India. All the foreign investors are setting up data centers in India. For them, actually, how we can do the EPC services, how we can provide them services in operation and maintenance, and also once we get the know-how of these data centers, how we can get into the up to 1 megawatt of data centers of maintenance and operations and maintenance of these data centers. That's what our future outlook.
Mr. Rao, we generally know about the data center ecosystem, but our viewers would like to know about the cooling segment which you mentioned. This is quite niche, but cooling is very much required in a, you could say, a setup in the data center. Just could you give us the detail about the products in this cooling segment?
Yeah, data center is nothing but actually it is just cooling of the data center, which is the high power consumption. Most of the data centers needs to be run on 24 by 7 round the clock power, green power, that we are very much pretty there in that actually. Maybe we are also looking at actually from our 2 gigawatt how we can supply our green power to these data centers. In today's scenario, a lot of plug and play data centers are also coming in. A lot of companies are coming into that. Of course, we are not there into manufacturing of those equipment, but we are going to be there in their main block constructions, and as well as the powering these data centers with round the clock power supply to these data centers from our solar power plants.
Mr. Rao, of course, there's a lot of high capex announcements coming in. You did mention about BSS, which is, of course, going to have a capex including data centers as well. Largely, the analyst community feels that company was an asset-light play, and now it's slowly, some asset turns might increase. So will this become asset-heavy, and there might be some pressure on the financials in the short period? How's your view on this?
No, definitely my answer is no, because actually we are very conservative and we are very safe play we are doing. Out of 25 gigawatt of my total vision for 2030, just only the 5 gigawatt is coming in, 5 gigawatt is coming in that capex model. Rest of the 20 gigawatt is my EPC only, where I can manage my financials, both mix of 20 gigawatt of EPC plus 5 gigawatt of IPP, I can able to manage. That's not a big constraint as of now what we are looking at.
All right, so management has stated they are still preferring to play asset light and large amount of business. That's roughly around 80% in your target. It will be coming via EPC. So that's the clarification coming in from the management. But Mr. Rao, apart from this, Andhra Pradesh important order, the IPP order which has come in, that's a 2 gigawatt project coming in. And of course, you have not mentioned that in the order book itself. The amount is on the higher side. That's roughly 9,000 odd crore if I'm not wrong. What are the key timelines for it? Just give us the entire expectations of this progress and by when the execution and the cash flows will start coming in.
Yeah, this is, we got the GIVA from the state government of Andhra Pradesh to set up a 2 gigawatt solar power plant. And right now, actually, how we will convert this 2 gigawatt, including BESS also, we are thinking, because actually we have not yet finalized the contracts with off-takers. This contract is to set up a 2 gigawatt plant, for which actually we are in the process of pooling the almost around 8,000 to 9,000 acres of land in the state of Andhra Pradesh. And yes, you are right that actually this is the 9,000 crores investment is there, and in same time 9,000 crores RT is going to come for our EPC arm also. Now we are in the right path, that we are in the process of acquiring the land and even the connectivity. This power needs to be connected to the central grid, that is the CTL. Even we have identified the substations, and we are in the process of getting the connectivity approvals. If these two things will happen, can happen in next 6 months, once it is two things are in my hand, then I will start bidding for this supplying of this power 2 gigawatt to the various people, like big data centers I can participate, or even public sector companies I can participate. But right now it is a staggered program. Maybe next 2.5 to 3 years time that we are going to complete
Yes,
this 2
Mr.
gigawatt. It
Rao.
is not.
Interestingly, Mr. Rao, there is a section of the community which invests in unlisted space also. There's a lot of interest because you have a lot of arms which are not listed yet. Are we going to see any value unlocking in the future, say in the next 6 to 18 months, any of your arms coming to the listed bourses or some mergers happening?
Of course, actually, all these three unlisted arms are extremely doing well, actually, than what is our expectations. Like our Bondada E&E Private Limited and Bondada Green Engineering Private Limited, even our Bondada EcoBuild Private Limited, all these three companies, even our Adpol Technologies Private Limited, all these three companies are doing pretty much better, good, means much better than what we expected, actually. All these four companies have the opportunity to unlock this value of these companies in maybe next 1.5 year to 2 years time. Maybe initially we will come with our Bondada Green Engineering, where we are manufacturing a lot of MMS structures and telecom towers, and thereafter one after one it will come. The numbers are pretty good, and future outlook is looking very, very promising.
Well, that's pretty interesting on that. That means value unlocking coming in the next 12 to 24 months when it comes to the unlisted arm, and that's a key question being asked from the HNI community and even in the unlisted space as well. But moving on to the financials, you stated in the con call that the margins are expected to improve by 100 basis points in H2. What are the levers for that? Is there a cost reduction plan or there's something else?
No, but as you all know that actually we have venturing into the small scale projects to the big scale projects. Now, whatever we have undertaken the projects which are very big in at one single location, so that actually our overheads and other things can be optimized. Number one. Number two, whatever the projects we commissioned so far, like 1 gigawatt and another 2.5 gigawatt of solar power projects under execution now, all these projects will come to the stage where actually we have to book the O&M revenues. Even our BSNL project O&M revenues also started. Basically, this O&M revenues, if comes at least 10 to 15% of O&M revenues adds to mixture of our total revenues, this O&M revenue comes with pretty good margins. Based on that, actually, we are expecting that actually another 100 base points improvement and increase in our profit margins.
Mr. Rao, there has been an improvement in the working capital numbers. I was seeing the FY25 numbers and I compared them with H1 numbers. There has been a significant improvement coming in and across all the parameters. So this improvement in working capital, is this sustaining in H2 also? You're expecting that to happen? And if that happens, will we see the cash flows improving? Because they have been kind of volatile.
Yeah, EPC companies always this volatility is there, but definitely our focus is on collecting the receivables. Definitely we have very big targets, stringent targets are these collections, and we are on right track. So no problem in this working capital management. I think we have set this working capital, both fund limits and non-fund limits from the banks also till 2020, financial year 2026. And there's a huge focus on collections. I think the last 6 months or 7 months, actually, we have done very good collections from our receivables also.
All right. Thank you very much, Mr. Rao, for giving your views and clearing all the queries which we had for our viewers had written us to. But Bondada Engineering, looking at the key management takeaways from our conversation, three important things stood out. They are looking for more data center ecosystems for growth and give a lot of value-added services around this ecosystem. So the second important thing the management has stated is they are still playing safe on an asset-light model. They have stated that out of the 25 gigawatt target which they have given, 80% will be on the asset-light EPC segment. They will have a higher exposure. And the unlisted arms, that's what the street was looking out for. Value unlocking is expected in the next 12 to 24 months. There are 4 unlisted companies which the management had spoken about. So that's also something which is very important for the existing investors and the folks who are tuning into KYC. But that's all for today. Stay tuned to NDTV Profit.